Something big is happening in global finance. Since the start of this year, the US dollar has lost 12% of its value against the euro. That's a massive move in such a short time. Back in January, $1 bought you 0.97 euros. Today, it only gets you 0.85. So what's behind this shift? And more importantly, what does a stronger euro mean for you, your money, and the global economy? Let's first see what's going on in Europe. After Russia's invasion of Ukraine in 2022, the EU made a drastic shift. It cut off most of its natural gas imports from Russia. At the time, many feared this would cripple Europe's economy. Energy prices skyrocketed, inflation surged, and the outlook looked bleak. But they adapted fast. It diversified its energy sources, poured money into renewables, and signed new supply deals with the US, Qatar, and others. And surprisingly, that resilience paid off. Inflation in Europe is now cooling faster than in the US, and the region's trade balance looks stronger. Together, these forces have boosted demand for the euro, driving up its value. But while Europe has been stabilizing, across the Atlantic, the story looks very different. The United States is drowning in debts, over $35 trillion and counting. And because the government continues running massive deficits, it has to keep borrowing. High interest rates make this borrowing even more expensive. For global investors, this raises a big question. How sustainable is the US fiscal path? That uncertainty chips away at confidence in the dollar. This phenomenon is called de-dollarization. So even though the dollar is still by far the most widely held reserve currency, it's been losing a lot of its power recently. Additionally, the US has been politically unstable, facing government shutdowns due to budget disputes, frequent assassination attempts, and widespread riots across the country. This damages global confidence in the dollar. Ever heard of BRICS? It stands for Brazil, Russia, India, China, and South Africa. Together, they're moving away from the US dollar. They're trading in their own currencies, building new payment systems that cut the dollar out of the equation, and even talking about launching a shared currency backed by gold and other commodities. BRICS nations represent over 40% of the world's population, and they account for about 25% of global GDP. So this is kind of a big deal. So what does all this mean for you? In the short term, a weaker dollar could make imported goods in the US more expensive. Everything from electronics to European cars. But for Europeans, it means stronger purchasing power abroad. For investors though, it's a wake-up call. The dollar losing ground isn't just a currency story, it's a sign that the global financial landscape is evolving. The euro, the yuan, and even gold could all play bigger roles in the years ahead. The question now is, are we witnessing the early stages of a new global monetary order?